Good evening. This topic today is lenders and how the borrowers can fit into their mold. We will use a presentation to explain these things a little better, but every borrower needs funds and every lender needs to find borrowers. They don't make money if it's not lent out. The money lying in their bank is no good. So they are interested in giving to the borrowers, and the borrower is interested in borrowing to buy a house or whatever they have to do. So, but lenders have some rules. They say, okay, if this is not met, then you cannot come to this program because there are portfolios which are saying prime, subprime, and what sort of portfolios they can sell it to somebody else and get the money back and re-lend it again so they make a small profit. So they keep on doing this packaging. But that's not our interest. Let them do what they want, but they either accept it or they don't accept it. So let's go to the presentation. It'll be much better to explain the entire thing rather than just talking on one topic. So permit me to share my screen. Okay, we have a clean thing and we will open up our presentation, which is here. And we will say, so we talk about a lender. As I told you, there are many types of lenders, and there is one lender for you to fit your situation. Or let's put it way, you are a borrower which fit in some lender's mold. The difference between either getting the deal done or not getting the deal done. So if the objective is to get the deal done, somehow we'll get it done. A mortgage broker can find the most appropriate lenders. So as a borrower, you are the second part of the thing. The borrower has to borrow, otherwise he doesn't have the money. He can't have use of the property. So a borrower has many criteria to fulfill to a lender, because that is what is called the criteria for underwriting the risk. Because technically when the lender gives money to the borrower, he is taking a risk. And how big a risk is the borrower? It depends on many factors. We'll come to that. Now, the underwriting parameters which the lenders normally use is the first one is the collateral. It means the subject property which you are giving as collateral. What type of marketability does it have? Is it somewhere in a good marketable area, or it is isolated, or it's a bad area, which the building or the property don't sell very easily? Then the lender is a little averse to lending in that area. So the type of property is very important. But most of the houses in the residential areas are covered. We talk about remote areas where the property loan to value is very high and the marketability is very low, because nobody would find that type of a house. Or maybe they're doing a temple or a church or a gurdwara. All these require, it's like a religious place. You can't even foreclose. What are you going to do with it? So that is a limited marketability, and that's where the collateral comes in. And then, of course, you have the character of the person or the borrower. Character would mean how long have you been at the same job? How long have you been at the same residence? Have you been, have you got any charges against you? Have you become bankrupt ever? And technically, basically, a general comfort letter that you have been a steady person where you didn't have any problem with the law or with other creditors. And of course, then comes the word of credit. The credit is basically you have credit cards, you got lines of credit. How do you use the credit? Have you been paying on time? Because if you don't pay on time, then your credit score goes down. And when your credit score goes down, then you're limiting some lenders you can't go to. So it's very important to improve your credit scores. Even if it's low, then we can find out what the credit score is and we can find out ways to improve it. It's not only the timing issue, it's also how much you've used. So sometimes it's good to improve credit is to take a second mortgage, use that money to pay off all your debts. It's like debt consolidation. And you slowly reduce your debt load. You're getting a mortgage, which is the cheapest form of money, and you can improve your credit. But credit score is important. So other than remember, just pay on time if you're supposed to pay something. Otherwise, it gets reported to the credit reporting agency, TransUnion and Equifax, the two ones we have. The idea is to have at least minimum 2 years record with them. Higher the better. And then of course you have capital. Now capital is how much money you're putting down to buy the house. How much money of yours is there? You can put 5%, you can put 10%, you can put 20, you can put 30, you can put 40 and 50. Now you have a different lender for each one, different underwriting rules. And of course, they feel more comfortable when you have more money inside. So for that reason, I would say the capital is quite important, what we put down. And then of course we have the capacity. You borrow the money and say you're supposed to pay a certain amount of mortgage and other debt load you have. You're supposed to at least pay, say, 37% of your earnings to all your debts, and then your ratio comes. That's how much you can, how big a house you can buy. That you can get yourself pre-approved for that. So at least you know what your capacity is to debt, how much loan can you service with the job you have. So these 5 things are very important to the lenders, and it should be also important to the borrower to understand that he could improve in any of these aspects if he before presenting to the lender. And then of course we got the lender types. As we said, if your ratios are good, don't worry what they're supposed to be. If they're good, we will definitely take you to the A-class lender, like the banks, insurance companies. They give the best deal, and there's a lot of stability. But this is you're getting money, so there's nothing about stability. You can take a bank money or you can take insurance company money. It's the same. In the end, what is the rate? We can get you better rate than the banks also. Once we go to the insurance companies, they are the lowest in the market. So there's no way you can beat that rate. And of course, if you have a little less ratios, more ratios, like you can go to trust company and mix, and you can get a bigger loan to value, you can get better deals than the A-class deals. And to cap it up all, we have the private investors who can take, they have a bigger appetite for risk. So they can give you a second mortgage to a bigger loan to value ratio. That means they can give you, if you had 75% first mortgage for 10% extra, they can give it to you later on. But for that, you don't need to go to them. It's cheaper to go get yourself insured and pay the premium rather than to pay extra interest rate, because these interest rates range from 12 to 14%, the private investors. But everybody here is in the business of making money. And of course, the business is to lend to borrowers, and the borrowers are going to borrow money for whatever they want. I want to stress here the flow of information, what happens during any transaction. You have a borrower who has to fill up an application. This whole scenario was built up and the mortgage professional will help you to fill it up. The most important thing is you got to disclose all the true facts about your case. That is paramount, because you should consider the mortgage professional as your friend and tell him everything, because he will find a way how to best represent your case. If you lie to him or you don't give the right information, it looks bad on him and looks bad on you, because when they find out that what we're saying is not true or we can't substantiate it, we have problems. And you don't have to pay the professional anyway. The lenders pay them. So the professional is working for the lender and for you, but for your best interest. The bank's only interest is, do you fit in the mold? They're not interested in helping you. They're interested in helping themselves. But we are interested in helping you. So that's why important the borrower has to ensure that he has somebody looking after his best interest. And of course, the borrower and the mortgage professional make a long-term relationships, and so do the lenders who are dealing with the mortgages. They have long-term relationships. So they have relationships which can help conclude deals which also have minor defects. There shouldn't be a problem. In the end, of course, the lender gives the money, borrower gets the money, and they get the property, and everybody's happy. But in case of a bank, let's say the banks directly take the application. So the banks directly take the application, and the lender either gives you the loan or it doesn't give you the loan. If you fit them, fine. Otherwise, you don't get the loan. The mortgage professional not used. So lender will always try to fit you in their criteria. If they refuse it, the lender is out. And there's a report on your credit report that you went to this lender. But still better, rate and deed are available through mortgage professionals, because we know which lender to go to. So, and make sure that we don't get an unnecessary remark that this lender refused the deal in your credit report. It becomes a permanent thing. So, to conclude, there are borrowers and there are lenders, and there's always a lender who is right for you. So, there is a lender for every type of mortgage deal. A mortgage broker can match you with them. That's why it's very important to get a mortgage broker. And remember, they don't charge anything. They get the money from the lender. But of course, if the deal doesn't fall in a prime deal, or where we go to a lender which charges a fee, the mortgage broker also will have to charge a fee, because he is not getting paid by the lender. And then engage a mortgage broker professional for best advice before going to a bank. That's very important, because once you go to the bank, you have a credit report marked that you went to them and nothing happened. So we don't want to unnecessarily make credit reports, inquiries into the credit report, which doesn't help the issue at all. Remember, mortgage professionals are always working for your best interest. That's all you need to know. And you can save money keeping that information in mind. You go down the site here and see the videos available for various topics, and also would like you to make sure you listen to the webinars every week, or recorded webinars, and we have videos on each topic. You can see them. And plus, if you have any questions whatsoever, please send us an email and we will answer them. And of course, if you want a confidential web chat with one of the professionals, let them know. They will arrange that right away, or whenever the time permits, to have your web chat. You could be anywhere in Ontario or anywhere in Canada. You can connect with them and we can do the transaction in this virtual office. I would say thank you very much for watching. And as a request, I would like you to go to the Facebook page and write your review about this, share this video, and that's a link to our Facebook page. I would like you to at least like it, if not anything else. It will be very appreciated. We are struggling to get more customers or more viewers into the site so that we should be able to make a difference, because this is a new way of purveying business, the mortgage business, where the client is doing everything virtually through the help of technology. I must thank you for watching and have a good night. I will now stop sharing the screen. Actually, I should have said goodbye when I wasn't sharing the screen. Okay, hold on. Let me come back. Okay, here we go. Sorry. Thank you very much for watching and have a good night. And in the meantime, I would like to say good night. And it was beautiful talking to you. Any questions? Do send us an email. Till then, thank you very much. Until the next time, we will wait. And God bless. Thank you.